Now presenting Greg Reed with Kraken Robotics.
Okay, thank you everybody. Appreciate being able to tell the Kraken Robotics story. We are an ocean technology company based in Canada. We provide solutions for the subsea market, predominantly focused on two end markets, defense and offshore energy and renewable energy. We trade on the TSX Venture in Canada on the ticker PNG, and then we trade on the OTC market in the US, KRKNF is the ticker. What you see on the front page here of our slide deck is one of our products called the Catfish. This is a solution used for being able to image things on the seafloor, whether they're subsea mines or whether they're things that have fallen out of the sky like airplanes, used to image things in very, very high detail from great distances. Okay, so I'll start off, we'll get in, talk a little bit about our products here and talk about our market, but really starting off being a public company, reasons to invest. It's a fairly simple story when you look at us, and the first couple points relating to why we think we're a good investment really relates to the size of the market that we address, as well as the innovative technology that we bring to the market. We have what's called dual use technology market, so we can use it both in the defense market as well as the commercial market. And if you look at the size of the market, it's about a $30 billion market. And what we provide are solutions that are used in ocean exploration, used for defense security related purposes, and used for things like offshore wind and offshore oil and gas. If you look at what our products and services really are, it's very high-end imaging sonars, and it's also underwater robots with those imaging sonars on them, as well as batteries that we provide to our own underwater vehicles as well as other people's underwater vehicles. I'll talk a little bit here in a minute about the industry, but the subsea domain has high barriers to entry. It's a very challenging market to work in, and so you look at those 2 points. You look at our customer base. We have we'll go through that in a few slides, but we have a strong customer base. We sell into navies in Canada, into the US, into Denmark, Poland, a number of other navies around the world, as well as we have some large offshore energy and offshore wind related customers as well. And the real dynamic driving us as a company and driving our market today is the global security challenges that are happening on the ocean domain, as well as the energy transition challenges as the world moves eventually from oil and gas to renewable energy. From a financial point of view, if you look at our story over the last 12 months or so, we've signed more than $100 million in contracts, and our pipeline is very strong. We'll get into some detail on that in a few minutes here. We have two parts of the business, the products-related business, which is nice high-margin business, and then we have a profitable, what we call a robotics as a services business, which is providing our solutions to customers who don't want to buy a $5 million piece of equipment. They just want us to operate the equipment for them and then provide them the data. And that is really the non-defense market. The insider, we're aligned with other shareholders. There's almost 20% insider ownership. And if you look at our financials, we've had 60% plus revenue growth for several years. And our EBITDA margins are starting to show some good bottom line leverage here. Just talking about the team for a second, we're about 235 employees today. By the end of this year, we expect we'll probably add another 30 people based in North America, but have an office in South America as well as in Europe. And really, why we're successful in the market is really all about our technical capabilities. So whether it's a deep science team, engineering team, technicians, data processors, as well as software. You can see we have almost 50 people focused on the software side. We really have a strong technical team, and we go up against big players like Northrop Grumman in the U.S., Thales, the big French defense contractor, and we can put our team against any of those other companies from a technical point of view. Capital structure-wise, we're about 200 million shares, so about 100 million market cap Canadian. Balance sheet at the end of the year was about $8 million in cash. We have some warrants that are almost in the money, and they expire this summer. That would bring in about $6 million in cash. And we also, a notable thing from our financials is that when we get a customer order, we're generally getting anywhere from 20% to 50% of the order balance up front, so that helps fund the business. A little bit about the company. The oceans, a lot of people don't, everyone's enthralled by outer space and all the various companies that are making pursuits in outer space, but the oceans cover 71% of the Earth, and we barely know a lot of detail about them. If you look at our customer base, I mentioned we're Canadian, but we really do have a global customer base, and we're bringing both imaging sensors, batteries, and solutions to them. Simple tagline when people say, what do you do? To really simplify it is, we're in the underwater drone business. We provide our own drones, but we really provide the eyes and the engines of other people's underwater drones as well. So those eyes being the sonar technology, as well as the engine being the battery technology in other people's underwater vehicles. So regardless of who sells the most underwater drones in the world, a lot of them are our customers. So as that market grows, we'll participate in that nicely. From a company a revenue mix point of view, we have the product side and we have the services side, or we call it robotics as a service. You can see the split there. Our two major markets are defense and offshore energy. So we're about a 80% revenue mix focused on the defense space. The balance is really predominantly offshore wind, but a little bit of offshore oil and gas. And products is about 75% of our business. The mix might change a little bit on a year-to-year basis, but the real drivers of the business right now being defense and offshore wind, things will probably stay that mix for the coming number of years. Okay, excuse me. So I mentioned the subsea domain, very challenging space, and why is it challenging? Pressure is intense. You're putting something down to 6,000 meters in the ocean. The pressure is like, having a 747 on the pin of a needle. Corrosion is a big issue. Communications and GPS. There's no GPS underwater, so location tracking is an issue. Very limited communication. Battery life is a big issue. So all of these things add up to give you a hostile environment. Companies put equipment into the water. Sometimes it doesn't come back. So a lot of times it gets beaten up. So when companies are selling an underwater vehicle, there's oftentimes lots of replacements or lots of spares sales along the way. So it's a challenging environment. And what does Kraken bring to the game? On the left-hand side, you can see the imagery on the top and the imagery on the bottom. And that's really where the company started, was with our sonar technology. So conventional technology that you can see on the top there, that is a picture of some vehicles that are on the floor of the ocean floor. This is using our technology on the bottom. So both of those images were taken from the same location, basically. The real difference is that as you go further away from an underwater vehicle with Kraken's technology, you're going to get the same resolution at range. With conventional sonar technology, which is called side scan, the further you get away from the underwater platform, you're going to start to see a degradation in the signal, and your picture is more blurry. So we bring really nice pictures, really nice imagery to the underwater domain. In the middle, you can see that our technology and developments in the industry are replacing things that used to be done with divers or old remotely operated vehicles. So that's our Catfish product right there in an offshore wind farm in the U.S. And then on the battery side of our business, what we are doing is we're bringing very high energy density into a fixed footprint by what we call pressure tolerant encapsulation technology. So think of a silicone type gel that goes around our batteries, as opposed to on the top there, you have batteries that would go in an underwater vehicle that have to have a titanium pressure vessel as well as oil compensation. So they're heavier. The competitors are heavier. They put less energy density into a vehicle. So we'll talk about that in a little bit, but that's some of the advantages that we bring to the market. Okay, just talk about the markets here for a second. So the defense industry, the maritime domain is definitely seeing a big increase in activity over the last couple of years, and no doubt what's happened in Russia with the Ukraine and the Nord Stream pipeline sabotage has really brought increased focus on for people knowing what's on the ocean floor, what's happening with their infrastructure. So geopolitics is driving increasing naval spending. The last 25 years or 30 years has all been about, when you've talked about various challenges across the world, various wars, it's all been land-based for the most part. So there's definitely an uptick on the naval side, whether it's the Baltic and the Black Sea with Russia, Ukraine, whether it's the South China Sea, the Taiwan Straits, with the great power competition with China and the U.S. Right now, the Persian Gulf, which we've heard about that for the last 20 years, and really was where underwater technology started to get fairly aggressively used in terms of security purposes. All of those areas around the world, even the Arctic, there's Arctic resource competition on now. A number of countries are trying to lay claim into various parts of the Arctic, and the result of all this is an increased focus on maritime defense technology, whether that's surface combatant ships, whether that's submarines, or whether it's unmanned underwater vehicles like ourselves or our customers would provide. So one other important thing is, besides that wind to everybody's back in the defense space on the maritime side, a lot of that equipment is old. So if you see the last bullet there, there's more than 300 mine hunting vessels around the world that are more than 20 years old. So the equipment has not been updated in many a year. So you got two dynamics. One, you've got the driver of the industry happening because of the geopolitics, and then you've also got a whole bunch of old equipment. So that means that there's a big upgrade cycle happening right now in our industry on the defense side. Just a quick picture for you. button on the bottom there.
Our secret sauce where we started a few years ago developing synthetic Aperture.
One of the few companies globally with a proven SaaS product offering. We've put our systems on more than 20 different AUV and ROV platforms. What does SaaS give you? It gives you ultra high resolution at range. And so what does that mean for military customers? It means you get in there, you look at what's on the ocean floor with your equipment, and you get out of there. So you're keeping the sailors out of the minefields. So that's very important. On the commercial side, these big offshore vessels that might go and map the seafloor, they might cost $100,000 or $200,000 a day for day rates. So with new modern equipment like ours, where you're able to cover a wider swath, very high resolution. You're effectively getting the job done quicker and giving them really good quality data. So that means that there's fewer vessel days, and that means that these vessels also have, there's obviously less emissions because you're out there. So, the whole topic of emissions is a big issue, and when we bid contracts in Europe, you always see the companies will talk about we saved X amount of kilograms of CO2 because our technology only needed to be out there for 2 weeks instead of a month and a half. So that's synthetic aperture sonar. It's really the basis of all of our technology on the imaging side. Right here, you can see the catfish system that we've talked about, and as I mentioned earlier, it's really a 4 or 5 year old. We've had it in the market for about 4 years now, and we've sold it to a number of navies, and we'll get into some of the pipeline opportunities with that. But we're really excited about what's happening with our catfish. On the battery side, here's an example, and we'll just use the one customer here. So this is one of our customers that has a fleet of underwater vehicles. You can see that our batteries are inside there. And the selling point here is that the customer took the original batteries that they had in there, took them out, put in our batteries, and then they were getting 100 hours of endurance as opposed to about 50 hours of endurance they were getting before. So that was a sales proposition. And one question, what does number 3 mean in terms of time? 3 minutes left? Okay. All right. Gonna go real quick here. So the next few are a number of snapshots. You can read through them in the deck, but really just showing what we've done the last couple of years on the customer side. Danish and Polish Navy, 45 to 55 million in revenues that we're part of the way through that revenue recognition. You can see our equipment on the back of these vessels. In the top right, that is the Danish Navy, where we delivered 4 systems now. In the bottom right is one of the Polish mine hunting vessels. The Danish one on the top is an unmanned vessel. The Polish one is actually mine hunting vessels with Navy people on it. Anduril, I mentioned it previously. If you haven't heard of them, just Google them. Very interesting. Palmer Luckey founded Oculus, sold his glasses, his VR company to Facebook, and then in 2018 started Anduril, 1,500 employees today. In a horrible tech market last year, private company raised $1.5 billion, landed some major contracts in the underwater space, and their foray into the underwater space was because, was with our customer who they bought about a year ago. So we expect a lot of opportunity coming out of their efforts in the underwater space. HII that I mentioned previously, they bought Hydroid, which was the largest underwater vehicle manufacturer in the industry. We provide sonar technology to Hydroid, and there's some data points there. And everything I mentioned so far was product related. Here's some example of some of our technologies used in the service side, from offshore wind to looking at decommissioning old oil fields with subsea debris, and our technologies used to penetrate into the seabed. Okay, I got 1 minute left. So large contract momentum is building. There's the 100 million plus of contracts. From the financials, nice up and to the right. In the last 2 years, we've given guidance each year. We beat our guidance. We report results soon for Q4, and we'll provide guidance for next year. You can see what consensus is for next year. Growth looks really good. EBITDA margins are improving, and very good top line growth. Pipeline, I know I'm out of time here, but a few things on the sonar side. On the catfish product, there are hundreds of systems over the next 5 years that are going to get contracted, and it's really Kraken and a couple of our competitors that are going to win most of that, or all of that business. We only have a handful of competitors for our catfish product, and you look on a map, and if there's oceanfront and it's a friendly country, chances are we're in the mix on the bid side. Okay, we're not going to win them all, but we got enough for that our small company is going to have really nice growth. On the battery side, I made the comment about as these XL UUV, the very large underwater vehicles come into the market, and they're the size of a school bus, our per vehicle battery sales goes up significantly. And then on the services side of our business, we'll continue to get really good results out of the offshore wind space. That is most offshore energy and offshore wind is most of the business on the services side. And but that's not to say we won't get any service contracts from navies or defense companies, because in some cases there's certain countries that don't have the budget. They have a capabilities gap of having equipment or people that can work the equipment, and so they're coming to us to say, can we provide services to their navies as well? And final point, management and board. Just from the board side, I'd highlight we've got some really solid people on our board. Vice Admiral Mike Connor used to run the U.S. submarine fleet for his last 5 years, I think, before he retired. Bernard Mills used to run $1 billion ultra sonar systems, $1 billion UK defense contractor. He just joined our board recently. And then previously to that, he worked in underwater systems for one of our competitors, Thales. So very, very solid group. And I could go on and on about the depth to our management team. We only had room to put 4 people up there, but we've added a number of key people over the last couple of years, and the team is rounding out nicely. And with that, I think I'm out of time for that part, but open up the questions. Anybody? Yeah, so the question was, going to a fiscal year, what's the predictability on revenues? A lot better than it used to be. And really it's because we've been winning programs that are 30 million, 40 million, 50 million that carry our revenues for, a couple of years. And we don't quote backlog numbers, but when we do give guidance next week or later this week when we report results, we will make the comment that we've got, without giving a number, we'll say we have very strong visibility into what we're going to do this year. And if you look at the last couple of years, we've heard it from people say, yeah, you just won a nice contract and that's great, but what are you going to do for an encore? And we've been landing more big contracts like that for an encore. So, we expect that to continue because the dynamic I mentioned of all these countries out there that have programs that are coming to upgrade their mine hunting equipment, these are all, a very one-off contract to us is a $5 or $10 million contract, but there's a lot of, 40, 50, $60 million contracts that are coming into the markets currently and over the next couple of years, and we'll win our share of them. And that's just the defense side. The services side will, have nice steady growth as well. So long-winded answer to saying very good visibility. Anybody else? Oh, sorry. Yes. Yeah, no, we did look at that. What happened was it expired and we didn't renew it. Our view is for every 2 people we talk to about that, we get a different opinion every second person. And we felt that if we were to do it, you always wanted to do it from a position of strength, having a whole bunch of really good news flow. So I wouldn't say that it's dead. It's something that we continue to look at, and we have advisors that talk to us about that as well. But that is one of part of a number of things we look at on the capital market side, including uplisting to bigger exchanges, to getting more research coverage, to getting more institutional shareholder base, retail shareholder base. So yeah, so that's the answer for now. Anybody else? Yes. Yeah, haven't looked at it in a little bit, so that might not be a great answer. But in general, there's been some, half roughly on a EV to sales or EV to EBITDA type basis, and maybe a third on 1/3 versus some of the M&A multiples that have happened in the last couple of years. Like I made the comment that HII bought Hydroid, the largest manufacturer in the industry, for 24 times EBITDA. And I think if you look at Raymond James Defense Tech Index, most of their companies are trading at 16, 17 times forward EBITDA. And so we're, easily half of that. Yep. Anybody else? Okay. Thank you very much.